Hello, investors and market enthusiasts. Welcome to Pro Data Traders, your go-to podcast for breaking down the stocks shaping India's future. I'm your host, SHEIN. Today, we're dissecting Reliance Industries' 2025 performance, a year of 5G dominance, retail revolutions, and green energy gambles. Joining me is our resident market guru, analyst. Reliance is India's most valuable company. What's the big story here?
Thanks, SHEIN. Reliance isn't just a company, it's an ecosystem. From oil to streaming, they're rewriting the rules. But 2025 was a mixed bag. Jio and retail soared, while their oil business faced global headwinds. Let's unpack it all.
How did Reliance perform in a year dominated by global volatility?
Great question, SHEIN. Despite tariff shocks, weak demand from China, and margin compression globally, Reliance's domestic strength was its secret sauce. They clocked over 10.7 lakh crore in revenue and 81,309 crore in PAT, a 2.9% YOY growth. Remarkably, their net debt stayed flat despite aggressive capex.
Let's start with the numbers. Revenue crossed 10.7 lakh crore, up 7%. But profits grew only 3%. What's holding them back?
Two words: global margins. Their oil-to-chemicals O2C division dragged EBITDA down. But here's the twist: consumer businesses like Jio and retail contributed 80% of profits.
Net debt stayed stable despite massive capex. How?
Smart cash management. They spent 1.31 lakh crore on 5G, retail stores, and green energy, but Jio's cash flows covered most of it.
Jio added 6.1 million users this quarter. But ARPU is still 15% lower than competitors. Why?
Strategy, SHEIN. Jio's pricing for volume, not premiums. Their 191 million 5G users aren't paying extra yet. But wait till they monetize features like network slicing for enterprises.
9% despite weak demand. How?
JioMart quick commerce orders jumped 2.4x. They're leveraging 2,100 stores for 30-minute deliveries. Plus, SHEIN's comeback is a stealth hit.
Will quick commerce hurt margins?
Unlike rivals, Reliance uses existing stores. Their incremental costs are low. Genius asset-light strategy.
Oil and gas EBITDA grew 5%, but O2C margins crashed. What's next?
O2C is a stormy sea. Fuel cracks fell 40%, but their domestic focus saved them. Meanwhile, new energy is the dark horse: solar modules, batteries, hydrogen. They're building a 10 billion green empire.
Will green energy ever replace oil?
Not soon, but by 2030, it could be 20% of revenue. The Kandla Green Hydrogen project is a game changer.
Jio continues to dominate the telecom space. What stood out this quarter?
Three things. ARPU rose to 206.2. Their 5G rollout reached 191 million users, the largest outside China. And AirFiber subscribers hit 5.6 million. Also, their EBITDA margin held steady at 50%. The Mahakam test run was phenomenal: 660 million visitors and not a glitch in service.
Wow. JioMart is a case study in digital infrastructure. Any comments on enterprise 5G?
Yes. Jio's private 5G networks are operational in places like Jamnagar, powering automation and security. That's a glimpse into India's industrial future.
Switching gears to retail, 88,620 crore in Q4 revenue. Analyst, what's driving this?
Before we dive into that, make sure to subscribe to our channel. Your support motivates us to bring you more in-depth analysis. Retail bounced back in Q3 and Q4, thanks to festive shopping and quick commerce. Grocery orders grew 62%, Ajio Luxe scaled to 800 luxury brands, and Trends 3.0 continues to reshape fashion retail. Overall, registered customers hit 349 million.
And don't forget SHEIN's relaunch. 12,000 SKUs already onboarded.
Right. And with 11,500 crore from consumer brands alone. They're aggressively expanding offline and online simultaneously.
Now to the entertainment bombshell: JioStar. Second largest paid streaming platform globally, 280 million subs?
Insane numbers. Jio Cinema dominated IPL 2025 with 61 million concurrent viewers during India vs New Zealand. They've already crossed 503 million monthly active users and have over 320,000 hours of content.
And their post-merger revenue already sits at 9,497 crore with positive EBITDA.
Exactly. The bundling with Jio Sims and broadband is a genius move. It's not just content, it's ecosystem capture.
O2C revenues declined. Yay. Was that a red flag?
Not quite. While polyester and fuel cracks were weak, Reliance optimized feedstock sourcing. And don't forget the retail arm of Jio BP, at offset margin dips. with higher gasoline and diesel volumes.
And what about the green push? We didn't see too many numbers.
Right. Financials were muted this quarter, but the ambition is massive. Solar, hydrogen, and battery storage projects are underway. Mukesh Ambani aims for net zero by 2035.
So new energy is more of a long game?
Exactly. Investors should treat it like a venture capital moonshot. High potential, long-term play.
RSI at 76 last week, overbought. Should investors worry?
Just a quick reminder, this video is for informational purposes only and isn't financial advice. Always do your own research. And talk to a financial advisor before making any investment decisions. Short-term, yes. But long-term? Reliance's 10-year return is 557%. Wait for dips below 1,300. Risks? Oil volatility and debt. But their cash flow machine can handle it.
Final take, buy, hold, or sell?
Hold for now. Jio and retail are stars, but O2C needs time. For long-term investors, Reliance is a must-have. Watch new energy, it's the future.
Thanks, Anast. That's all for today. Hit subscribe for more deep dives. Until next time, keep investing wisely.